Hello, and on this episode of the Mortgage and Protection Podcast, we have Paul Holland back from Henchurch Lane to answer some more questions on self-employed mortgages. Welcome back, Paul. How's it all going?
Yes, very well. Thank you, Tessa. How are you?
Oh, that's good to hear. Yes, all good too. Thank you, other than a little bit of a croaky voice, but it's that time of the year, isn't it?
It is indeed. The weather's changed.
It is. We're recording this episode in October 2023. So we've got lots of questions that we've already covered on self-employed mortgages, but we've got a few more, haven't we? So let's dive straight in then. So how do multiple incomes affect a self-employed mortgage application then?
Okay, so having multiple income sources as a self-employed individual can be an advantage actually when applying for a mortgage, but it's imperative that you are well prepared and transparent about your income. So if it isn't well documented, then it could quite easily become very tricky for you. The goal really is to evidence the fact that you're able to meet your mortgage payments comfortably. So how you document that is really going to show the lender exactly how well monitored your income situation is, and whether it's sustainable as well. So going forward, they want to know that that's going to be sustainable. So that's the key there. Now, of course, you'll need a good credit status and all of the other documentation needs to be in order. But in terms of the multiple income streams themselves, this is going to be evidenced by way of things like an SA 302 and your company accounts. So make sure they're all up to date. You can obtain them from your accountant, and if you haven't got an accountant, then you can log into your HMRC portal and you can download documents from any given tax period. Okay, so with regards to the multiple income streams, it could include any employed salary payments that you've got. So people could be self-employed and employed, or as a managing director, sometimes you do pay yourself a small salary as well. It's going to include things like profit from self-employment, dividends, profit from land or property, or any other investments that you've got in the background, and even a pension income if you're being paid that as well. So if those streams of incomes have been consistent and sustainable, and they look to be sustainable going forward, then they can all be factored into your mortgage application from an affordability point of view.
Okay, brilliant. So lots of points there to take away. So hopefully that all makes sense. So moving on then, another question here asks, how do mortgage lenders view seasonal income for self-employed applicants? That's interesting.
Yeah, so seasonal income can present a challenge from a mortgage application, but it's not insurmountable. It's not an insurmountable obstacle, sorry, when you're looking to secure your mortgage. So some tips here for someone in this situation would be provide thorough income evidence and documentation. So this should demonstrate your ability to manage your finances effectively during those low income periods. And when I say should, if the mortgage is ultimately going to be something that you can service, then that documentation should allude to that fact. Okay, and if it isn't, then naturally that should also be shown in the documentation. The key really is be prepared. So your documentation will only evidence your whether or not you're capable of keeping up the mortgage repayments or not. And if you've been doing this consistently, your record keeping consistently going backwards for a number of different years, then that's going to be visible by an underwriter. So the key is prepare yourselves now or as soon as you can, so that at the point where it comes to your mortgage application, you've got all of your finances in order. Another key point here or tip would be to save. So if it's a purchase application that you're looking at doing and your deposit isn't tied up in your property, so if it's not a remortgage or you're not selling a home, then the larger the pot of savings that you have, the better really. And again, that's just going to demonstrate your ability to manage your income and also save at the same time, which means that you're demonstrating to the underwriter that this seasonal income situation isn't something that's causing you any issues at all. And also the larger the deposit, obviously the borrowing situation itself will be smaller, so the borrowing amount will be smaller as a result of you having a larger deposit. So that's always going to go in your favour if you are one of these people that has these peaks and troughs to your income. Now, with regards to the seasonal income and the best way or the biggest tip that I can give anybody, the most poignant point when it comes to securing a mortgage with seasonal income for self-employed people, is professional advice. Now, you might think that's very coincidental because that's obviously what we offer, but there are so many lenders out there, some who will see self-employed people and self-employed income as risky, some that just don't like to look at it. But there are other lenders out there that have a much more lenient approach to self-employed people in general and seasonal income in general as well. So it's not quite as simple as walking into your bank and asking for a mortgage. And unfortunately, you're also unlikely to be able to just pick the most competitive mortgage rate that's available on the day as well. So a good broker in this instance would likely grey out a fair chunk of their day and speak with various different lenders from a calculated shortlist. So they'll already have a shortlist of lenders that they know would potentially fit the bill better than others. They'll approach those people, have a conversation about your specific situation, your scenario, and then they'll be a lot more confident when they come back and make a recommendation for the lender that's going to be best, or the best place to place your mortgage business at the end of that research period. So that would be the strongest point to note on that situation.
Okay, brilliant. So a great point there, a key point to take away from the episode, as you've said there. And also be organised. I think we took away from that when you were talking about the documents.
Yeah, so with self-employment, there is always the situation where whatever you do, it's only recorded once a year. So if you're making changes now, if you're 11 months away from submitting those changes to HMRC because you only declare your income once a year, then the lender won't be able to see that. So these changes need to be implemented at your earliest stage possible. And sometimes, if you haven't done things correctly, it can take a couple of years for you to actually cover up your tracks. So it goes back through all of the podcasts that we've ever done.
Yeah.
It's preparation is key, really.
Okay, so definitely something to bear in mind there. And just lastly then for this episode, so what tax returns are required for a self-employed mortgage application? So I'm not sure how much you can say here.
Okay, yeah, so we can be pretty bland and basic in this situation. So, if you're a sole trader, for argument's sake, or anyone that's self-employed, you'll generally submit your income scenario to HMRC once a year. So your personal income will derive of things like profit from self-employment, salaries and dividends. Okay, so you'll submit that to HMRC. April to April is the financial year. So whatever income you've earned through that period of time, you'll submit to HMRC, and then you'll get a bill for your tax off the back of that submission, that declaration. Now, that will naturally produce, very similar to a payslip on a monthly basis for a PAYE person, it will produce a document called an SA 302, which is also known as a tax calculation or a tax computation. And this document comes hand in hand then with a corresponding tax year overview. So it's almost like a bill from HMRC for your tax and then a receipt for the payment of the tax, effectively. So those two documents come hand in hand. Everybody with any self-employment income that they want to evidence is going to have to give those documents for a mortgage application. It's quite straightforward. If on top of that you're a limited company, so a limited entity, then you'll also need to provide tax returns for that business or company accounts as well. Now, these don't necessarily run from April to April. It all depends on when you incorporated your limited company. So for argument's sake, our company started in November. So we've got November to November company reporting tax period, and then my personal income that I draw down from the business will be declared or visible through an SA 302. So SA 302s if you're a sole trader. On top of that, your company accounts if you're a limited company director. In terms of the amount, if you've only been trading for 1 year, then you can apply for a mortgage to some lenders, and because you only have one set of accounts, of course, that's all they're going to ask you for, potentially a projection from your accountant. If you've been trading for 2 years, then most lenders or a bigger chunk of lenders will ask for the latest 2 years, and there are, again, some lenders that will go a little bit further and they require 3 years worth of trading figures from an applicant before they look to take a mortgage. So you can see just from the amount of accounts or the amount of history you have as a mortgage as a mortgage applicant will really determine how many lenders you have at your disposal and which is your best option to go to. So rather than sitting through or guessing or going to your bank and hoping that they're the best suited option for your situation, again, every one of the brokers in the team will know exactly who needs 1, 2 or 3 years worth of accounts, and how they'll be viewed depending on the applicant's individual circumstances.
Okay, well, really clearly explained there. So hopefully that all makes sense to anybody watching this. Thank you. I think that's all the questions we are covering on this episode. We will be back, won't we? We've got some more. We'll be covering quite a few more questions on another episode later on. So thank you for that, Paul, as always. Again, hopefully we've helped a few people out on the episode, and I'm sure we'll speak to you again soon.
Hopefully we will. Yes, indeed, Tessa. I'll see you soon. Thank you for your time again.
See you soon.
Bye.